for the month of March. We start with the biggest surprise, which came on the last day of February 2024. The quarter 3 FY24 GDP figures were announced and the year-on-year growth for the quarter was 8.4%. This has resulted in a significant upward revision in the GDP projections for the year and the next year. Before we explore this and our usual content on FX reserves, inflation, interest rates and other economic indicators, I urge you to like and share this video and subscribe to this channel. Now let's discuss about the GDP. In the biggest surprise since our last monthly update, the GDP growth rate for quarter 3 FY24 was at 8.4%, even as most analysts expected this growth to slow down from the previous quarter's 7.6%. This happened even as the GVA came down to 6.5%. So the growth rate was aided by significantly higher tax collection and relatively lower subsidies. Notwithstanding this, these are very impressive figures, and based on this, various national and international agencies have revised the GDP growth rates for the full year and FY25 significantly upwards. Please let us on what you think are the prospects for GDP rate in quarter 4 FY24 and in FY25. On the base of the above, the National Statistical Office has revised the growth rate estimate for FY24 to 7.6% from 7.3% for the year ending growth March 31st, 2024. This figure represents a robust economic performance, especially when compared to the past data. The significant GDP growth in March 2024 compared to previous periods can be attributed to various factors. One key driver is the government's increased focus on capital spending and infrastructure development, which has stimulated economic activity and investment. Additionally, supportive policies aimed at boosting manufacturing, investment and consumption have contributed to the positive growth trajectory. The surge in GDP also reflects the effectiveness of government initiative in driving economic expansion and fostering a conducive business environment. Overall, the strong GDP performance in March 2024 underscores India's economic potential and the effectiveness of policy measures in sustaining growth momentum. By leveraging these trends and addressing challenges such as slow growth in certain sectors, India can continue on a path of sustainable economic development and prosperity. The GVA for the year is likely to be 6.9% as against downward revised estimates for FY23 of 6.7%. The farm sector was struggling this with a GVA growth of a mere 0.7% as against 4.7%. The last quarter, that is quarter 3 FY24, was particularly bad with agricultural GVA contracting by 0.8%. The GDP growth rate projections for FY25 has been revised upwards to 6.8% to 7% range from the earlier projections of 6.3% to 6.5%. Now let's discuss about the CPI. On 12 March 2024, the inflation rate for February 24 was released by NSO in India and it stood at 5.09%. This figure, measured by the Consumer Price Index (CPI), reflects the overall increase in prices of goods and services consumed by households. Do you think the inflation will soon fall down to 4%? What is, according to you, a comfortable inflation rate that the RBI should aim for? Moderate inflation rate indicates a stable pricing environment, which is crucial for maintaining purchasing power and economic stability. Various factors contribute to inflation, including demand-supply dynamics, global commodity prices, government policies and currency fluctuations. In the case of India, managing inflation is a key focus for policymakers to ensure sustainable economic growth and price stability. The Consumer Price Index (CPI) for February 24 in India eased to 5.09%. Comparing this to March 2023, where the comparable figure for Consumer Price Index (CPI) in India for February 2023 was 6.44%. A moderate inflation rate can have both positive and negative impacts on the economy. It can stimulate consumer spending and investment by signaling a healthy economy, but if inflation rises too rapidly, it can erode purchasing power and lead to economic instability. Monitoring inflation closely allows policymakers to make informed decisions regarding monetary policy, interest rates, and fiscal measures to maintain a balance between growth and price stability. In the context of India's economic landscape, managing inflation effectively is essential for fostering sustainable growth and ensuring the well-being of its citizens. Now let's discuss about the foreign exchange reserves and gold. India's foreign exchange reserves has risen to a record high of 642.5 billion US dollars for the week ending March 1 as per the latest data from the Reserve Bank of India RBI. This figure has shown a consistent weekly increase for the last 2 months. This growth in reserves reflects positive economic indicators, increased foreign investments, and a stable economic environment that contributed to strengthening India's reserve position. For the week ended March 1, 2024, gold contributed $48.417 billion to India's foreign exchange reserves, reflecting an increase of $569 million from the previous week. Gold reserves play a significant role in adding value and stability to India's foreign exchange reserves, highlighting the traditional importance of gold in the country's economy. However, according to World Gold Council, on 19 March in India, domestic gold prices also rose to all-time highs, reaching INR 66,529 per 10 grams, reflecting a 4% increase month to date. Additionally, the Reserve Bank of India RBI added 4.7 tons of gold in February, taking its gold reserves to an all-time high of 817 tons. Additionally, Indian Gold Exchange Trade Funds EFTs saw inflows of 93.3 million US dollars in February, the strongest monthly inflow in 6 months. Now let's discuss about the export and import. India's merchandise trade deficit widened to $18.71 billion in January 2024 from $17.49 billion in January 2024. In February 2024, exports surged by 11.9% year-on-year to $41.40 billion, while imports increased by 12.2% to $60.11 billion. This growth in exports was seen majorly because of engineering goods 15.9%, electronic goods 54.81%, organic and inorganic chemicals 33.04%, and drugs and pharmaceuticals 22.24%. As forecasted by the Export-Import Bank of India, in March 2024, India's export and import scenario will show significant developments. India's merchandise export for the fourth quarter of FY24 is estimated to be around $118.2 billion, marking a year-on-year growth of 2.96%. India's merchandise exports for the fourth quarter of FY24 is estimated to be around $118.2 billion, marking a year-on-year growth of 2.96%. The positive growth in exports was attributed to India's strong GDP growth fundamentals, expected global easing of monetary tightening, and resilient global demand. The Export-Import Bank of India projected that non-oil exports would amount to $95 billion in quarter 4 of FY 2024 with a year-on-year growth of 4.55%. The total merchandise exports for FY 2024 were expected to reach $435.3 billion with non-oil exports likely to maintain the previous year's levels. Now let's discuss about the consumer spending. In February 2024, average rural consumer spending rose to 3,773 rupees per month per person, while urban spending increased to 6,459 rupees, showcasing a significant rise in consumer expenditure compared to previous year. Consumer inflation in India stood at 5.09% in February 2024 as released on March 12, slightly lower than the previous month's 5.10%. This data indicates a stable inflation rate with food inflation at 8.66%, showing a marginal increase from the previous month. The Indian economy in March 2024 is expected to see increased consumer spending on various items including colors and balloons for the festival of Holi. The increase in consumer spending on colors and balloons for the festival of Holi in March 2024 is expected to have a positive impact on India's economy. This surge in consumer spending reflects growing consumer confidence, lower inflation, and a strong real income growth outlook, contributing to increased disposable income for households. The rise in real household spending, projected to grow at 6.7% year on year, indicates a favorable outlook for consumer spending in India for 2024. However, with the declaration of elections, there is a likelihood of a temporary pause in the allocation of funds towards the initiation of new programs in India, particularly those aimed at bolstering consumer spending. This pause is anticipated to extend until the second quarter of the fiscal year 2025 as the government reallocates its resources and focuses on electoral activities. Now let's discuss about the USD and INR exchange rate. The USD to INR exchange rate fluctuated within a narrow range starting at Rs 82.8463 on March 1, peaking at Rs 83.043 on March 4, and then stabilizing around Rs 82.89 before closing to a record low of Rs 83.45 on March 22nd, the reporting Friday. These fluctuations can be attributed to various economic factors such as the market sentiment, global trade dynamics, central bank policies, inflation rates, and geopolitical events. The slight variations in the exchange rate reflect the interplay of supply and demand for currencies, investor confidence levels, and external economic conditions impacting the USD INR exchange rate during this period. What do you think should be a fair exchange rate for the Indian economy, where the exporters remain motivated to export and also does not create an imported inflation? Now let's discuss about the PMI and IIP. The Purchasing Managers Index PMI update for India in March 2024, released in March, indicated a robust growth trajectory. The HSBC Flash India Composite PMI rose to 61.3 in March from 60.6 in February, as updated on 21st of March, marking an 8-month high. Please tell us if you share the optimism expressed by the purchasing managers. This growth was driven by buoyant demand conditions that fueled growth and accelerated aggregate sales, with the manufacturing sector leading the upturn with the fastest expansion in factory orders and production in nearly 3.5 years. New orders rose at a faster pace than the previous month, and both domestic and export orders showed improved vigor. Input prices grew at a faster pace in March, leading to some softening in composite margins. As released on 12th March, the IIP data for January 2024 indicated a growth of 3.8% compared to the previous year. For the month of January 2024, the quick estimates of Index of Industrial Production IIP with base 2011-12 stands at 153. Now let's discuss about the government policies. Some of the programs initiated by the Indian government in March 2024 include Rooftop Solar Scheme, PM Suryodaya Yojana. This scheme aims to provide 300 units of free electricity per month to 1 crore households through rooftop solarization, promoting renewable energy adoption and reducing electricity costs for households. Housing Scheme for Middle Class Families, a scheme to assist deserving individuals from middle class families living in rented houses, slums, chawls, and unauthorized colonies to build or buy their own homes, addressing the housing needs of its demographic segment. Vaccination Drive for Girls, a strategy to encourage vaccination for girls aged 9 to 14 years, focusing on preventive health care and ensuring the well-being of young girls through immunization against diseases. Atmanirbharta for Oilseeds, an initiative aimed at achieving self-reliance in oilseeds production by promoting modern farming techniques, research on high-yielding varieties, value addition, procurement, market linkages, and crop insurance in the oilseed sector. Dairy Farmers Support Program, a comprehensive program to support dairy farmers by controlling foot and mouth disease and building on existing successful schemes like the National Livestock Mission and Infrastructure Development Funds for dairy processing and animal husbandry. These programs have been initiated to address various socio-economic challenges, promote sustainable development, enhance healthcare outcomes, boost renewable energy adoption, support housing needs, ensure food security, and empower specific sectors like dairy farming and renewable energy production. Each program targets specific areas of improvement to contribute towards overall national development goals. The Indian government under Prime Minister Narendra Modi focused on boosting economic growth through increased infrastructure spending, incentives for manufacturing sectors, and policies to enhance renewable energy adoption. Recently, India had an update on the Trade and Economic Partnership Agreement between the European Free Trade Association EFTA and India involves the signing of a landmark agreement on March 10, 2024. This agreement, signed by EFTA states Iceland, Liechtenstein, Norway, and Switzerland, and India aims to bring significant economic benefit by enhancing market access, simplifying customs procedures, and promoting investment opportunities between the parties. The agreement is said to facilitate increased trade and investment flows, job creation, and economic growth by creating better integrated and resilient supply chains, offering new opportunities for businesses and individuals on both sides. The TEPA signifies a significant milestone in fostering a deeper economic partnership between EFTA and India, reflecting a commitment to enhancing economic cooperation and a mutual understanding. That's all for now, and we are looking forward to seeing you again very soon. Your engagement is vital. We would love to hear your thoughts in the comments below. Don't forget to share the video with others who might find it insightful, and remember to hit the like button if you find this information valuable. Stay informed, stay engaged, and together let's navigate the exciting journey of India's economic progress. Thank you for watching.